When is a sales tax not a sales tax? Societies have invented a lot of different ways to collect taxes. Several of them bear a close resemblance to what we think of as a sales tax, while not being quite the same. One that caught on across Europe as well as a host of other countries around the world is now being talked about here in the United States. When Andrew Yang announced his run for president in 2019, his number one policy goal was a universal basic income. It proved to be quite popular. But few people noticed that the major source of revenue for this proposal was that same not-quite sales tax. This tax is generally known as a value-added tax, or VAT. The VAT is similar to a sales tax in that it's a tax on things that are sold. Unlike a sales tax, however, which is only collected at the end of the line when the finished goods are sold to an end user, the VAT is collected at every step of the process. We're going to explore what a VAT is and what effect it would likely have if implemented here, and also look closely at two similar VAT proposals on this episode of Progressive Solutions. So how exactly does a VAT work? Well, let's say the VAT is 10% and see where the money goes. As I noted earlier, and in my recent video on the sales tax, which is linked up here and in the description below, a VAT is collected all along the supply chain. Raw materials suppliers collect the VAT from manufacturers, who collect it from distributors, who collect it from retailers, who collect it from consumers. Let's look a little closer and follow the money. The mining company sells ore to a refiner for, say, $100, plus a $10 VAT for a total of $110. That mining company pays the $10 VAT to the government. So far, $10 in taxes collected. The refiner then refines the ore and sells it to a manufacturer for $200 plus a $20 VAT, or $220. But they already paid $10 in VAT to the mining company, so they keep that part and only need to pay the other $10 to the government. Now $20 in taxes have been paid to the government, which is exactly what the refiner charged the manufacturer. The manufacturer then makes goods and sells them to a distributor for $350 plus a $35 VAT. Since they already paid $20 in VAT to the refiner, they only pay the remaining $15 to the government and keep the rest to make up for what they paid. The total paid to the government is now $35. This process continues up to the retailer selling to a consumer, collecting a 10% VAT on their sale price and passing what they didn't pay to whoever supplied them with the finished goods on to the government. In the end, the government gets a total of 10% of whatever the retailer charged the consumer. So even though a VAT is collected at many different points along the way, the final result is the same as a sales tax. Some percentage is collected eventually from consumers and paid to the government. One big advantage of a VAT over a sales tax, it's a lot harder to cheat. The only time a sales tax is collected and paid is when a retailer sells to a consumer. If the consumer pays cash, it's an untraceable sale and almost impossible to catch when the retailer cheats. With a VAT, there's a long string of collections and payments, and if someone breaks that string, it's easy to catch them. Another advantage to a VAT is that the final price including the VAT is usually included on the price tag, while a sales tax is usually added to the price on the tag. As a result, it's easier to hide even a large VAT. People are a lot less likely to complain about a tax that they don't even see. And European VAT rates are high. Even less wealthy countries like Albania, Serbia, Bulgaria, and Belarus have a VAT of 20%, and at least 13 European countries have higher rates. Most Scandinavian countries charge 25%. In short, a VAT can bring in a lot more revenue to the government without as much political cost associated with a high tax rate because people don't see it. And it's harder to cheat. Those are the upsides. Now, what are the downsides to a VAT? Well, the first downside to a VAT is the cost. With a sales tax, only retailers collect and pay it, and government officials only need to track retail sales. With a VAT, everyone along the supply chain collects and pays into the VAT, and government officials have to track them all. That not only raises the price of goods because everyone along the supply chain has higher office costs, but more involved government administration also costs some of the revenues, and that means less money going to the government programs that need funding. But the much larger downside to a VAT is the same as with a sales tax. It's regressive. Rich people spend a lower percentage of their income and a far lower percentage of their wealth, so they pay a lower share of the VAT. When the VAT was raised in the United Kingdom about a decade ago, even the BBC reported that despite the Conservative government's claim that this increase would be neutral to progressive, it would actually be regressive. And in the UK, they tax not just goods but also services, so a VAT should be less regressive there. The Conservative government's claim was based on the fact that rich people spend more money than poor people, so they'd pay more of the increased tax, while ignoring the inconvenient, for them, truth that the wealthy still spend a far lower percentage of their income or wealth. So why does the VAT have growing appeal here in the US? And it's recent. In 2010, the Senate voted 85-13 on a resolution that said that a VAT would cripple families on fixed income. Just 5 years later, both Ted Cruz and Rand Paul proposed replacing a variety of taxes, including payroll taxes and some income tax, with a VAT. And early in the Trump administration, a lot of officials were pushing for a VAT. And it's not just Republicans. Democratic presidential candidate Andrew Yang's universal basic income proposal included a VAT as a way of raising a lot of that revenue, kind of defeating the purpose. For a more progressive way of paying for a UBI, see my video on UBI, also linked up here and in the description below. Most recently, Democratic Senator Ben Cardin introduced what he called the Progressive Consumption Tax in late 2020. This bill has been compared to a plan put together years earlier by tax law professor Michael J. Graetz, although there are a few differences. Graetz served in President George H.W. Bush's Treasury Department and is now the alumni professor of tax law at Columbia University. His plan, which he calls the Competitive Tax Plan, includes a VAT combined with various other tax law changes. So what changes do Graetz and Cardin propose, and where are the two plans similar, and how do they differ? Most importantly, is either of them actually progressive? Well, for starters, both implement a VAT. Cardin's is 10%, while the Graetz plan is 12.9%. In both cases, they admit that just by itself, this new VAT would be horribly regressive. In addition, their purpose isn't to raise more revenues, so they propose offsets, tax cuts to balance things. Both propose cutting income taxes to zero for single filers making less than $50,000 and couples making $100,000. Both also cut down the number of tax brackets to 3. The Graetz proposal is slightly more progressive than Cardin's, but they're very close. And in both cases, people who currently don't make that much money and don't pay federal income taxes, they get nothing. In both cases, the largest benefits go to couples making between $100,000 and $200,000, which is quite a bit above the median average, and high-income earners do very well, so it's not progressive. In addition, both proposals would lower the corporate profits tax rate even further than the Trump Republican tax cuts went, down to 17% for Cardin's bill and 15% for Graetz's. Now, corporations wouldn't be paying any new tax under this plan. They'd just be collecting and passing on the VAT, so they get a tax break for nothing. Only Graetz's plan proposes cutting payroll taxes, that's Social Security and Medicare. For extremely low-income workers, both the employee and employer tax portions would be cut. That gives corporations that hire low-income workers another tax break. Of course, Graetz doesn't explain how the Social Security and Medicare Part A trust funds would make up for this massive loss, so it would help to destroy those programs. And that's a problem. Both plans also provide a new way of figuring what's now called the Earned Income Credit, and both seem to provide some sort of new child tax credit. In addition, both plans provide a rebate of sorts for low-income workers. The language, especially for the Graetz plan, which isn't fully spelled out, can be very difficult to quantify. Graetz claims that his plan is revenue neutral, but the numbers don't seem to add up. He also wrote in 2015 that we need a simpler tax system, but he's really adding a lot of complexity. As far as progressivity, Graetz claims that his tax plan is slightly progressive, but he also lists a source that at least I can't find. So It's possible that his rebate plus child tax credits could make up for the other regressive changes. It's possible. I've reached out to Senator Cardin's office and asked for a breakdown of the effects of his bill by income levels, but as I record this video, I haven't received a response. If I do get one, I'll post it in the comments below. The one thing that is certain about both these plans is that they're going to add complexity to the lives of people who can least afford more complexity. They're going to have to file new forms to get the tax credits and rebates, and might even still have to file the current income tax forms anyway. To make a VAT anything but horribly regressive means adding a whole jungle full of new terms and conditions and new tax rebates and new credits and new red tape and new demands on poor people. It's a nightmare at best. So why do politicians keep coming back to it? Well, it's possible that the politicians who actively support a VAT are enamored by its hidden quality. It's also possible they don't care that it's regressive. And finally, since over 150 countries have some sort of VAT, some people might believe that it's not so bad. The one certainty about a VAT is that almost any attempt to switch from something else to a VAT will result in poor people paying more and rich people paying less. Unless, that is, it's combined with a complex and tortuous set of new tax changes that may or may not actually work. Fortunately, there are plenty of other taxes that work far better. What combination of taxes do you support? Let me know in the comments below. And be sure to subscribe to this channel so you can see more videos as they come out. And as always, thanks for watching. Stay progressive. At least that's an ordinary fumble tongue. Why don't I stick to what I wrote? Because it's a lot easier. Government. I'll just say gummit. Almost got through it. Okay, once more, softly and with feeling.